It is Wednesday afternoon, November 3rd, after the close, and it's time for our S&P 500 chart analysis update brought to you by freechartvideos.com, using time-honored techniques to understand modern markets. This video is for educational purposes only and is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and to make those investment decisions that are suitable for your financial situation. I am not a licensed professional, just a guy that draws lines on charts. And just to remind you that on this 30-minute chart, we can see that the S&P has been in a very clear trend channel for about 2 months. And this channel has, every time it's hit this lower green line, it's bounced. Every time it's hit this top line, it's found its way eventually back to this lower line. Every time it's found this lower line, it's found its way back to the top line. So we found the lower line here. We did not find the top line. We came back, found the lower line again, tested it. This looks to me for about these 8 days, 8 to 9 days, and we're going to take a look at this area right here. This looks to me like an extended area of consolidation. When the market starts going up, often it doesn't take that much of a consolidation or a base to be built before it's able to make a new high. But as it starts to get a little bit closer and closer to its target, it has to build a base. It's going to have to go sideways a bit, or it will not be able to have the kind of support necessary to make a strong upwards move. So just look at how well this channel has been working. And now we're going to zoom in on just this area. By the way, this is the neckline to an inverted head and shoulders pattern that formed over 5 months after the flash crash. This is the line drawn from the top of the bull market in October 2007 and also over the top of the April 2010 highs. I offer this line as Exhibit A to the bears who say we are simply experiencing a bear market rally. If we were, this line should not have broken. So anyway, let's look at a close-up of just the past 8 or 9 days. You can see there's a bunch of lines here. It looks like somebody dropped a bunch of colored toothpicks on the screen. But the important features here are the fact that we've had this line of resistance from back on the 25th, November 1st, Monday of this week, yesterday late in the day, opening today, and even a second bounce off of this line after the QE2 announcement. So it looks to me like this line finally has broken. We closed over it. And I just want to show you real quickly here. You might make the case that from here to here is an ascending triangle because we had so many touches on it. Now there's little patterns that take place inside this, but to me, I think the operative chart pattern for right now is going to be an ascending triangle. And if we measure the depth at this first reactive move, we end up, I'm going to have to give us a little bit more room here, we end up with a target off of that pattern that should take us up to about 1220, maybe a little bit higher. When will that happen? Boy, I wish I knew. I would tell you if I did. I can tell you this, that I don't think this is going to take place and take out this top line. I think this line is still going to act as resistance. So if we get the full move out of this, it will be probably at least 4 to 5 days away, provided that that it's a fairly straight line move. Again, when you look at these patterns, you can tell a lot about what the eventual move will be. You cannot always tell that much about when that move will be. I will say that it's not unusual for a triangle pattern or an inverted head and shoulders or something else like that. It's not unusual for it to make the minimum implied target in one move. So we could just head straight on up and maybe hit it in 2 or 3 days. What I would look for is this 1996 line. I would keep an eye on that. Make sure that continues to hold as support. It may be tested again. Let's look at a 2-minute chart, and you can see that this line was almost tested here, tested here, tested here, tested after the announcement was made, then support was tested, then it came up over the line, did a little consolidation pattern, and then it came back over the line. So this is the S&P, the daily update. I hope you've enjoyed the chart, and just keep your eye on 1996. Now that that's broken, that should be support. And please, when you get a chance, if you're not looking at this video off the website, please check out freechartvideos.com. And we've got other charts. I've got a chart I put up yesterday of TNA that is interesting, and we'll be doing a couple of charts a day. Thanks.